this computer. Awesome.
Yeah.
So the on-ramp using ETH or Bitcoin or whatever, you're going to have to do some AML KYC. I get it. And then once you had ETH, could you then send it through some mixer or, you know, again, I'm just trying to figure out if you're looking for this loose or no AML KYC, at some point you're going to have to try to anonymize the crypto, or this is again just kind of a lot of words, but in the end, just take my passport and let me break away from a centralized bank, but I still have AML KYC. It seems to defeat the purpose of what you're doing.
Again, I think like to get crypto, you have to go, to get from fiat to crypto, you probably will have to go through some KYC, right? Because you have to get it through a centralized entity, a centralized exchange. But I think the difference is that once you get through that, and once you have ETH, you can go into this, you know, world and try all these different platforms and investment alternatives, and there's dozens of them, without going through that step. So it's like you need to get through the gate, but once you're there, it's like a playground, you know? And the experience is so much better than anything I've seen anywhere. I mean, not even, I mean, it doesn't compare to fintech, to like Robinhood or Venmo. Like everything is just very smooth, seamless. Like everything takes a couple of minutes. It's really nice not having to create an account for every single thing.
Okay, can you recommend one? And I don't know if they're called wallet or a DeFi exchange, but just something that I can go and use. So I mine Ethereum, but I rarely hold it. But I bought a big bag of Ethereum in preparation for this discussion. So
nice.
I'd like to, from here, you know, recommend some exchange. I don't care if you shill something or if it's just, you know, something that you use. But that would be helpful.
Okay, so you have ETH now, I guess, like in a centralized exchange, right?
I have it in a hot wallet. Yes.
Okay. So first thing to do is you need to download MetaMask. Okay, and that's a browser wallet, and it connects with all of the different DeFi applications automatically. Like it'll detect that you have a MetaMask address, and it'll just automatically connect to that and like see how much tokens you have and like what you can start using in the application. So download MetaMask and then transfer your ETH to your MetaMask address, so you have your funds there. So you can exchange that ETH to other ERC20 tokens, but always keep some ETH on MetaMask to pay for gas. Right now it's, you know, it sucks that gas is pretty high. So for like just sending ETH and tokens, it's just a couple of cents. But for example, I created an NFT store the other day because I want to sell or I want to give out proof of pre-order tokens for my book.
Very cool.
So I'm creating these NFTs, and minting NFTs is like $1 or $2, but actually creating the store was $20.
Who are you using to create the NFT?
It's so there's two like main projects working on this stuff. It's I'm using Mintbase. And I went with them because they have this really cool functionality where they attach sound or video to the NFT. So my idea with this is I'll kind of record a message to, you know, whoever pre-ordered my book. So it'll be like a personalized token. So Mintbase is one, and then the other one is PO app, like proof of attendance.
Yep.
And that's like another type of NFT where, you know, they give out tokens to people who go to like the different Ethereum hackathons, and they're like little badges that people collect.
Awesome.
Yeah, so that's two. And then OpenSea is like the main kind of NFT marketplace where, again, if you go just with your MetaMask wallet, OpenSea will detect the NFTs that your wallet is holding, and it'll display them for you. So you can open them and like look at them.
Very cool. Oh, sorry
Yeah.
to kind of pull us away from the
Yeah,
discussion.
yeah,
So
yeah.
MetaMask wallet, then what?
Okay. Then, so get your ETH into MetaMask.
Yep.
And just transfer that. And then you can just start, trading tokens. Like if you wanted to,
So I'm most interested in these tokens seem like stranded assets to me, and historically fiat currency it really doesn't generate much in terms of interest in banks. So if I'm going to hold ETH or some other token, I'm interested in gaining some interest for staking mechanisms, and that's kind of what we're talking about. So when you say trade ETH, in my mind I'm like, am I buying Tezos? Is that
no. Okay,
okay?
so yeah. So first thing I would do, I would go to Uniswap
Mm-hmm.
and buy some DAI there.
Mm-hmm.
So DAI is Maker's stablecoin.
Yep.
Right? It's pegged 1-to-1 with the dollar, collateralized by ETH. And just start out with Uniswap to see kind of the experience of this DEX, because it's really kind of magical. I think like when I started using Uniswap is when kind of DEXs and DeFi started to click for me.
Camila, as a US resident, can you use Uniswap or Binance DEX, or are those off limits to US citizens?
I mean, there's nothing to say that you couldn't use them, because again, like you are you're going through KYC to buy the ETH in the first place, and then you're using kind of this platform to trade it for other tokens. But then when you want to go back to US dollars, you have to go through a centralized exchange again. So,
right. But I've noticed on some of these, some of the websites, it won't allow you access if you're coming from coming from the United States. So I don't want to get into too much of the technical stuff, but is this a situation that you have to use a Tor browser or a VPN? And again, I'm simply just trying to understand it.
Yeah. So Uniswap updated their front end recently to exclude some countries. Mm-hmm. And they excluded like some of the countries that, like Venezuela, like countries that have conflict with the US. Yeah. But they still allowed US citizens to trade there. So
okay, interesting.
So I guess, yeah.
We'll look into it more.
Yeah, but I guess, it never hurts using a VPN just in case.
Yeah, no worries.
Yeah. Okay, so, right. So I go to Uniswap first just to see, get that experience, which, to me is just like, it's so simple and it's so easy and so quick that it kind of like, it really drives that point across of how easy using money can be and like how fun it can be. So
I think DAI was one of the tokens that in the last 90 days has dramatically outperformed Bitcoin.
Maybe it's Maker, because DAI is like tied.
Yeah, I think it was it's a stable coin. I think Maker has dramatically outperformed. You're right.
Well, DeFi tokens have done really, really well this year overall. I had a little piece in the Defiant on that. I had a table with like all the DeFi tokens, and I mean, yeah, Synthetics is up 4 times. Link is up 2x. Everything is like really.
And these, I think it was Eric Voorhees who said recently that we have to change our approach in 2020, because back in the day it was like Bitcoin and shitcoins, right? But now I think he's trying to pull us all into it. There's like Bitcoin, Ethereum, altcoins, and shitcoins.
Yeah. I agree. I think obviously it's not black and white. And I mean, after covering this space for a year, I've I know that it's actually delivering value. You know, I know that it's useful, that it's allowing you to do things that just couldn't be done before, that, you know, they're real companies doing real projects. And these tokens are actually useful. You know, they're not just like some, you know, like vaporware that's all it has is a,
But
like,
where is the use? I mean, I think that's a great point that you're making. Like,
mm-hmm.
where is the use? So if I buy DAI, that's
Mm-hmm.
a stable coin.
Yeah.
And then are you saying, do I stake DAI or get
Yeah.
leverage on DAI? Is that kind of what you're saying? And or do
Yeah.
I purchase another token like Link?
No. So what I would do with DAI is I would go to either lend it to get interest on it. So and or or you could just buy tokens that automatically start accruing interest. That they're kind of a derivative on DAI deposits, and that's really interesting because they're tokens you hold and that you watch in your wallet how they start to gain interest.
Interesting.
So some of these tokens are CDAI, which is the compound version of that, ADAI, which is Aves version, and there's a few others. I actually did an experiment in starting this year where I invested 100 DAI in 10 different DeFi platforms to kind of see how they perform. And I tried out, I think it was like 4 different of these like interest gaining tokens.
Yes.
And it's interesting because like you'd assume that they're they perform in the same way, but they have been kind of, you know, they've been doing a little bit differently, like so I think it's worth kind of owning a couple of them, like maybe like
Interesting.
3 different.
So was the interest paid in the same token or a like token, or was it paid in an alternative token? Because I think when you use some of the DeFi staking mechanisms, you actually, and I was reading a little bit about Compound, the one staking mechanism I was looking at paid you in Compound. So you could stake USDT and then you were paid in Compound.
Yeah. So okay, so that's staking is different from what we're talking about now, which is, you know, gaining interest on DAI.
And I may be using the wrong term, by the way, when I say staking. So keep me honest here.
Yeah. So it's I'm trying to find the little like spreadsheet I had with my DeFi 10, so I can kind of tell you a bit more of like how these tokens have done. But okay, so when you buy these interest gaining tokens, what you're doing is, again, it's a derivative on DAI that's lent out in a lending pool, and so that's where you're getting the interest from. It's so you're like, in essence, depositing DAI for other people to borrow that DAI, and they're paying interest, and you're getting part of that interest. But because you're getting it in this kind of derivative token, what happens is that that token ends up increasing in value, and you're earning that interest in that token. So you're earning interest in CDAI if you're owning a compound DAI, but then you'll trade it for DAI and get that interest in DAI or ETH or whatever.
Camila, is there actual volume that you can come in and out of, like CDAI or ADAI, or are you kind of caught holding it if you have a large amount?
So there definitely is volume, and the thing with Uniswap is it has like, or with AMMs in general, is they have these like they work with liquidity pools, which work in this way. They hold the token, and then they hold the ETH in some ratio to that token, so that there's always liquidity for whatever token you're trading.
Interesting.
So, and it works in a curve so that, you know, it automatically calculates at what price you're buying and selling. So there's no order book in these AMMs. And that allows you to buy and sell whatever token you want instantly. So you're never stuck holding. There might be, you know, some slippage though. So that's something to watch. And there are really, really great DEX aggregators, like 1inch is one, which it executes trades through, it looks at all the different prices across DEXs and gives you the best price.
Got it.
So that's a good way, that's a good place to trade these tokens.
Can you control slippage in any way, or are you exposed to it upon the swap?
So 1inch tells you what the slippage will be. So, you know, if it's not good enough, then, I mean.
What do you recommend? Is it like 1%? Is there some kind of a standard slippage that people accept in terms of these transactions?
I'd have to look into that. I'm not
No
sure.
worries.
Like,
yeah, no worries. Because I've had that, or I've seen that discussion occur around slippage when I was doing due diligence on Rune.
Okay.
So I can probably go back to my notes on that, but that's another interesting.
Yeah, definitely. I kind of like, I use DeFi to experiment and like see how these things work, but I'm not like a heavy trader or anything. So, so yeah. Okay. So let me just, I'm getting to this article.
And if you don't mind, would you forward the article to me?
Yeah.
Well,
and I have like different updated versions of like how the portfolio is doing. So
I love that you did these tests. I do the exact same thing. When someone makes a claim, I'll contribute and just watch and just give it time, because you know, if you can't come in and out of it, there's no on and off ramps, the UI UX is too difficult. I just that allows me to stop and move away and focus on other things. So I really appreciate you sharing your research on that.
Yeah, of course. And so that's one thing I found going through all these like 10 different DeFi projects, is that it was extremely easy to use, like all of them. I mean, one's more than others, but they all took, I don't know, like a handful of steps, like 3 to 4 steps, a couple of clicks. Like it was like all super cheap. It all took minutes. Like I think UX in DeFi is I think the best thing about it. I think it's what can kind of start leading people in, because it's just amazingly easy to use. Okay, so let's see. So what I did in this portfolio is I invested in iDai, which is Fulcrum's version of DAI, ADAI, which is Aves version of like interest gaining DAI, and CDAI, which is Compound's version. So
I'm gonna, when I do this test post this call, I'd like to summarize your suggestions, but CDAI I'm most interested in, because as I understand it, Compound is listed on Coinbase.
Yeah.
So that could be my off ramp if I used Coinbase, if I sold CDAI.
So, okay, so CDAI is different from Compound token comp.
All right.
And I'll get into that.
All right. Sorry to interrupt.
Yeah. No, but I mean, you can always like obviously trade these tokens for ETH and have Coinbase as your off ramp.
Got it.
So, okay, so I would do these tokens just to, to start trying out all these different platforms and start gaining interest on DAI. Then there's this like really interesting project called Idle Finance, like IDLE, Idle.
Yep.
And what it does is it takes your DAI and it's like a yield aggregator in that it figures out which of these lending platforms is getting you the most yield.
Okay.
So instead of like you manually having to say, okay, A die is getting you more yield than C die, this thing does it automatically.
So it's sort of like the mining algorithms that we had that direct our when we still do GPU mining, it would tell me which was the most beneficial coin to mine.
Right.
You're saying that the idle finance does the same thing. It will move you automatically out of these positions. So that's pretty cool.
Yeah. So there's idle finance, and then Ray, RAY is also does the same thing.
Okay. Those are both yield aggregators.
Yeah.
Got it.
So I would also try those two. And then, okay, the other thing I would definitely try is token sets.
Okay.
So token sets, what it does, it has different trading strategies. So for example, let me go on the website now, but it has like following the 20 DMA for ETH. So when it goes above 20 DMA, it cashes into USDC. When it goes below it, it trades USDC for ETH. And it does this automatically, so it just, it follows the strategy, and it has the same thing for different trading strategies. And so I put 100 DAI in this like 20 DMA ETH strategy, and it's done incredibly. Like it's returned like, so I put 100 and now I have 173.
Wow. So, and that was over what time frame?
From the start of the year.
Incredible. Oh, that's really cool.
Yeah, and there's like different sets, that you can own and invest automatically in different strategies. And this is all like smart contracts doing this for you. And again, like, to me, this is what's so exciting. This all it took is having a MetaMask wallet. It automatically connected to token sets. I said, okay, I want to put in 100 DAI in this thing, and just left it there, and it just did the trading for me. And so that means like it allows anyone to invest their money in these like ways that were impossible to do before for like a regular person. Like you'd have to have like some asset manager do all this stuff and pay all these fees and have like really high investment minimums, but now anyone can do this.
So can you help me understand where the use case is beyond this investing? So is it like rehypothecation strategies and leverage down the line that's driving the returns to you? I mean, it seems like at some point someone's got to pay up. Somebody's losing and somebody's winning.
Oh yeah.
How is that happening?
Well, I think so for all these like stable coins gaining interest, the other side is people speculating, with the tokens they're borrowing. Mm-hmm. So people are taking leveraged DAI loans to use that DAI to buy ETH, to buy other like more volatile tokens. So they're the ones taking the risk.
Then they get margin called or
right.
blown out, and there's where you get paid and they lose.
Right.
So I just want to know who, if you don't know who the sucker in the room is, it's probably you, right?
I think in DeFi right now, it's a pretty small market. Like mm-hmm. There's been different estimates to how many people are using it. I think like 100,000 people are using DeFi right now.
Yep.
So still pretty small, and like it's pretty much for experienced traders. Yep. Or just like people who are using this to speculate, to gain margin, and so they're the ones who are putting up the risk. But I think the good side, or like the other benefit, is that you can take the other side and be into these more stable investments. So there's like for there's room for both kind of risk profiles.
Camila, I was reading that there are about 950 or 960 Bitcoin that are in this DeFi world
Yeah.
now. Are people actually using Bitcoin versus ETH to do these same mechanisms that you're talking about?
So the Bitcoin on Ethereum trend is super interesting, and we're seeing different kind of Bitcoin on ramps into DeFi. WBTC is the most used right now, and what it does is, you know, all these things. What they do is they hold Bitcoin and exchange it at 1-to-1 with an Ethereum token.
Yes.
So WBTC is an ERC20 token that's backed 1-to-1 with Bitcoin. And so it allows someone who holds Bitcoin and doesn't want to trade it to still participate in DeFi and use all these different things. With WBTC, there's REN protocol is doing the same thing. And that's WBTC is more like custodial, like BitGo is holding Bitcoin, people's Bitcoin. REN protocol is doing like a more trustless version where it's all like smart contracts based and whatever. So I mean, there's different like flavors of ERC20 Bitcoin. But
Where has been the security issue? I don't want to overdo the hack situations, because I don't know to what extent DeFi has been hacked. But can you tell me a little bit about the security? Like, what keeps you up at night regarding like what's happening?
Yeah. So far, the biggest issue hasn't really been a hack, but like the malfunction of MakerDAO's liquidation system in March.
Yep.
When ETH, I think, plunged 30% or something in one day.
Yeah, March 10th, 11th,
yeah,
something like that. Yeah.
March 12th. Yeah.
Yep.
Black Thursday, they call it.
Yeah, you got it.
So I think that's been kind of the biggest issue we've seen.
So that was
DeFi.
like a smart contract malfunction?
So what happened is, I think it was like bad design in the sense that when ETH dropped so much, there weren't enough liquidators wanting to take the bad loans. At the same time, the price feed wasn't updating correctly. So MakerDAO's price feed was showing a different price for ETH. Wow. And it was just like, it all malfunctioned because of the volatility. And yeah, they fixed that. But
what were the total losses, or what was the extent of the losses in regards to that? Were people made whole, or was there no mechanism to fix it?
So what happened there was that with when that happened, there was around 5 million of loans that became undercapitalized, and what Maker did was it went and sold MKR at an auction. So they had auctions to sell MKR to make those loans whole, to buy, to buy ETH and plug that hole, like $5 million hole.
Right.
So Maker holders were the ones who took that hit because they got diluted with the auctions. So yeah, that's how they solved it. There were some people holding collateral whose collateral got totally wiped out. So
okay,
that was the issue. But I mean, MKR, like you saw, is up a ton since then, and so they've it's up, I think, back up above Black Thursday levels.
Okay.
So they've made up for what they lost at that time.
Yeah, Maker MKR is up 147% in the last 90 days.
Yeah, and that's, I think the Coinbase listing had a lot to do with that.
Got it. Now, LEND, is that listed on Coinbase as well?
I'm not sure. That's Avis token.
Right, because I'm just looking at like the top 5, and I again, I don't even know where I got this chart. It may be yours, but I've got Kyber Network, LRC, Bancor, Melon Protocol, Maker. I mean, are these projects that you suggest I look at, or I'm just looking at their performance against Bitcoin in the last 90 days?
Yeah,
Really
I definitely look into them. I think Aave is great. They're innovating a lot. They're using flash loans to to kind of help people swap their collateral. I don't know. They're doing like really crazy stuff. So we'll definitely look into them.
Okay.
But I can get into Comp, which is compound token. Okay, so Comp, different from CDAI, which we talked about, which is this interest gaining token with DAI. So Comp is Compound's governance token, and what it does is it allows holders of at least 1% of Comp to participate in governance. So, and that means that you can vote on and delegate your vote, and you can also make proposals to how you want the protocol to be run, and that's all it does for now. So I think that's kind of one of my questions with Comp tokens is, okay, so this token, all it does is it allows you to participate in governance. It doesn't, like, that's different from MKR, which actually has this like value accrual mechanism, because what happens with Maker is that wherever there's a surplus in the system, they burn that and use it to buy more Maker. They burn Maker so that people, so that Maker holders gain that value of
Sure.
Where there's more activity in MakerDAO, Maker holders benefit more directly. But there's nothing like that for Comp. So it only allows you to participate in governance. I think the speculation there is that going forward, what Comp holders will do is that they'll vote in some sort of value accrual mechanism for the token. Either the buy and burn mechanism that Maker has, or the synthetics token has this kind of staking dividend that comes with it. So there's like different business models for these like DeFi tokens. And for now, Comp is just a governance token. So that's like one question I would have on that.
Well, why do you think Coinbase, because I may be mistaken, but did Coinbase invest in Compound token?
Yeah, they did.
They did, and
they invested in Compound, the company, like
right.
Yeah,
they own equity in Compound, the company.
Yeah.
And it's the same, correct?
The same as what?
Did Compound, the company, produce Compound?
Yes. Yeah.
Okay, but they own an equity position. They also listed it on Coinbase. Is that hype driving kind of Compound?
Maybe. I think, yeah. It's tough to say like why Coinbase did this, but they have been listing tons of DeFi tokens. So maybe, you could also argue, this has been part of their strategy all along, and it's just another DeFi token that they're listing.
Okay.
But, I think it did kind of call attention, to the fact that they listed it 4 days after it was issued. So that was a little bit, yeah.
Okay.
But I think, I don't know, I think Comp, you know, I may totally be wrong and it'll keep rallying, but it's up so much this week. Like, it's crazy. It was sold. It was first listed at 16, and it's over 200 now. Comp's market cap is at 2 billion, and that compares with Makers at 500 million. And Makers, like, still the biggest project in DeFi.
Mm-hmm.
So I don't know. To me, Comp now seems a little overvalued. But I don't know. It's been hyped so much that maybe it'll keep rallying. So.
Yep. At this point, you know, I'm not that interested in just speculating. I really want to understand, you know, what's going on behind the scenes. So this is super, super helpful. Kind of.
Oh, and sorry. So that's just Compound Solve issued this token that's Comp, and it's used for compound governance. And the way that people earn this token is not just through buying it in the secondary market. They can also earn it by participating in Compound's platform, by lending or borrowing in Compound's platform. So what's been really interesting that's happening is that Compound distributes Comp according to how big these lending and borrowing pools are. And the biggest lending pool in Compound right now is for USDT.
Yes.
And so right now, okay, so Compound distributes 2,800 Comp per day.
Yep.
And it splits it 50-50 in the borrowing and lending markets in these different pools that it has. And so USDT is the biggest pool, and that means that people who are lending or borrowing USDT on Compound are getting the most Comp.
It was like 95% of the 2,800 Comp a day are going to this 50-50 split.
Yeah. Mm-hmm. So what happened that was really interesting is that people, you know, started looking at this, and it just drove a flood of new USDT mostly, and just like new assets into Compound. Like they went from holding $100 million in their smart contracts as deposits to 400 million in 1 week.
I'll tell you, that's what was really the genesis of this discussion, and why I wanted to talk to you was this particular event, because USDT has so many use cases outside of even, you know, buying and selling crypto, in my opinion, in Asia. And I wondered if it was being used to leverage up those use cases, as well as all the things we're talking about in DeFi. And that was interesting to me, to get margin called on a stable token that you take leverage on. I mean, it seems unlikely.
Mm-hmm. Yeah.
So again, there are mechanisms that cause you to get margin called. I just need to work through those. But what platform can you lend USDT and be paid Comp for and use leverage? Do you know of one?
Yeah. So I have this tutorial in the Defiant on how to do just that. So there's this. So I mean, if you just wanted to lend USDT on Compound to get Comp, you can just do that on Compound, and that's easy. You just put USDT there. But if you want to do that with leverage, InstaDApp is a platform that does it for you, like in 1 click. And again, like that's all like automatically done with a smart contract.
Interesting.
Yeah, and so they, you know, what they do is you say, you know, how much USDT you want to put in Compound, and they'll, you know, take like borrow USDT with leverage and put that money in Compound for you, like in 1 click basically. And I'll send you the video tutorial that
Awesome.
this guy DeFi Dad made for the Defiant.
Great, thank you so much.
Yeah. So I think that was like really an eye opener this week, because what happened there is, you know, it kind of proved that how much token incentives can help activity on a platform.
Definitely.
I think the question for me there is, so if people are using Compound just to get the comp token, like how sustainable is that, right? Because in the end, like you want people to be using Compound to borrow and lend because there's actually demand to borrow and lend, not just to get the token. But I don't know, that's one question I have, like how does this all evolve?
I totally agree. You know, if you're lending USDT, you're getting paid in comp tokens, you'd want to sell comp tokens, I would think, to then potentially go through USDT and back to fiat, maybe. Is that a use case that's sustainable?
Yeah, I don't know. Well, so when you're lending USDT, you're getting comp, but you're also getting like the interest in that pool, you know, from people borrowing on the other side. So I mean, you it's not just to get comp, but yeah, like that's basically the question. Like if demand isn't very natural and it's just coming because you know you're getting comp in return, I mean, we'll see. Maybe it'll still end up driving enough, you know, maybe liquidity drives more liquidity, and people, you know, see that Compound is like the biggest lending protocol, and they want to go there to just, you know, earn interest on their USDT, and you know it works the way it's supposed to. Then maybe it works out and it is sustainable. But if the only reason that people are using Compound is to get comp, that I don't think will work out. But
Camila, what drives USDT, the use case, and you know, what drives that? Do you think it's just the digitization of fiat to buy crypto, or is it actually the digitization of fiat to move fiat around the world?
so as you know, USDT now is mainly an Ethereum token.
Yes.
And I've seen analysis of how USDT moves in the Ethereum network.
Yes.
And the main thing people are doing with it is using it to arbitrage. So they're using it to arbitrage between DEXs, between centralized exchanges and decentralized exchanges, between, you know, just like arbitraging between exchanges. That's there's a really cool infographic that shows USDT in yellow and how it moves, and it was just like going in between exchanges like that.
Got it.
So yeah.
Interesting. All right, so I have a laundry list of homework to do from this call, and I certainly appreciate your time. But it looks like MetaMask first.
Yeah.
And then you buy some DAI.
Yeah, buy some DAI and start going into all these protocols. Like buy a few of these interest tokens. Go to one of these yield aggregators. Go to token sets. Yeah, I mean, you can, yes, lend some USDT on comp, do it through InstaDApp and see how it works. And I'll send you my DeFi 10 story so you can look through that.
Yeah. This has been so helpful. I really appreciate it. This is kind of like, again, just my process to due diligence on different things. It's like it's more of a hypothesis than a thesis at this point, because, you know, I'm just asking more questions, and you're certainly an expert in this, and I can't thank you enough for your time.
No, really, I'm really happy to help. To me, like, this really is the future of finance, and so the more people I can help kind of look at it and you know, see how it works, I'll be happy to do that. And awesome. So just let me know if you have any more questions or any other ways I can help.
Definitely. Be safe out there, and I'll be in touch.
Thanks. You too.
Thanks.